Hey everybody, want to make a video here real quick. First, let me say that this is not investment advice. This is paper trading and for entertainment purposes only. Okay, so let's start off with the triple Qs. There's a gap right here at around 290, 291, and we've had trouble at this gap. You can see we had trouble at it right there and here. So 3 rejections at that, around that area. Coming up to that area again, and so we just had 2 big days up. I think we're obviously going to be due for a pullback here. I don't have any puts on the Qs. What I'm hoping and still hoping is that we do get a gap up in the morning, or some kind of bounce in the morning, maybe on some kind of earnings. Early it was Microsoft, and I don't know what just happened. It went from being up 5% to being down 0.7 here on Microsoft. You can see that. So I was really excited when I saw it up 5%. So I'm loading up on 1 dates or 0 dates. So that, obviously I don't know if that's going to be able to happen. It looks like we might actually gap down. I was able to get some SPY puts in. They're for 127. So this Friday expiration, they were 395 puts. So I bought 395 puts for this Friday for 75 cents a contract. You can see we are right at the downtrend line on the SPY. Sooner or later it's going to break out one way or the other. You can see it's kind of making this wedge. But the reason I bought puts was, if I can show you on the Qs, so I use the S triple Q quite a bit to trade the Qs. So this is inverse the triple Qs, so inverse the NASDAQ. There's a trend line that I've had since the beginning of the bear market. So every time we've hit this trend line, we've had, well, obviously large moves up in the S triple Q, which has been large moves down in the triple Qs. So you can see there, come back down. We touch it here. We did get under it a little bit, got back above it, back tested it. That was a big leg down in the market. Came back down here, hit it twice. Had a false breakdown there. Got back above it, held it, and then that was another big move down. So this move down here has been the counter trend up, but we're back down. We're back at the trend line. So I don't really like how the 1 day looks on the RSI. So there still might be more room to the upside. But if we look at the 4 hour, or actually I was looking at the 1 hour on the triple Qs today, because I have this bullish falling wedge too here. Actually, I messed with my lines. Okay, so there's a bullish falling wedge. We broke out of it there, but we came all the way back down and tagged this line, and now we've kind of gone sideways. But you can see there's bullish divergence on the 1 hour on the S triple Qs, and so obviously it just bounced here after hours. So you can see that these bullish divergences and these negative divergences when on the RSI, and usually on the it's on the MACD too, that it works out pretty well. But I really like using the 1 hour or the 4 hour on the S triple Q to play intraday moves and 1 or 2 day expiration. If there's negative divergence, as there was here, you can see it right here. There's a negative divergence, a big move down. So there was a big move up in the Qs. I did buy calls on Friday on the triple Qs. They were 285, so I paid 10 cents a contract. This was after the Qs was already up 1%. So this move was already confirmed. I sold them for a 5-to-1. If I would have held them, they would have been a 40-to-1 because they didn't expire until this Monday. But I was actually pretty mad about that the other day, that I didn't hold those. But that's how it goes. A 5-to-1's good. But anyways, so I used the S triple Q to trade basically, and so I saw this bullish divergence on the 1 hour here, and then on the VIX was holding. Wasn't any bullish divergences per se, but there is this gap here that was obviously an important gap, because when it held there on this candle, we had a big move up. It went all the way up to the 50. That was a move down that I caught on the. Really, I played coin, and I did play a SPY put there too as well, but also coin puts. But so that it had this big move up when it held the gap, and then we held that gap again today. So that was a good sign. So if we look, I like to match this up with the UVXY, which is another proxy for the VIX. I've got this downtrend line on the UVXY. You can see we've gotten above it, and every time since we've gotten above it, when we back test this line, you can see there's a high volatility day, and then it came all the way down. Never touched it on this way down, but hit it here, held that day, big volatility day. Okay, so you can see where we're at. We just tagged that line again, and not only do we do that, we've got bullish divergence on the UVXY on the 1 day. So the last time we had bullish divergence on the 1 day on the UVXY, you can see we had volatility. So the market moved down. Happened again here, volatility, here, volatility. And then it burned through the divergences. So that was building. And that was part of the reason I was thinking, that I knew we'd have a counter trend in the market, but I didn't expect it to go that high, to be honest. But once it was doing that, I was playing some 0 date calls and 1 date puts and just kind of day trading it. But so we burned through those divergences, and now we've made another bullish divergence on the daily there. So I liked that. And then if you look at the VXX, have that as well. And so you can see lower low in price, higher low in momentum here on the RSI. So lower low in price from this candle here. So it's lower low in price, higher low in momentum, bullish divergence on the 1 day on the VXX. So, this is telling me that we're most likely going to have some kind of pullback tomorrow. So I'm expecting, probably a 1.5%, maybe down here. Let's see. So from the close to theirs, about 1.2, 1.3%. It's right around 395. So my puts are for Friday. So if they get to 395 and they're at the expiration, they're going to be worth more than what I paid, which is I paid 75 cents a contract. But I think we could get all the way down here to the 50-day, which is this yellow line, and that's more like it. That'd be a 1.5% move. So 1.5% move would be 393 roughly. So not the best bang for the buck. So that's why I'm still kind of hoping that we do get a bounce in the morning. But another thing that led me to buy puts today was the 4 hour. So you've got some negative divergences on the 4 hour building, and you can already see it starting to move down after hours. Like I said, I hope there is some kind of bounce in the morning, because I think 0 dates would be the opportunity. If we get a bounce and say it's up 0.5% or even gets up 0.75% tomorrow morning, I think be able to get a great deal on 0 dates, and I still think that there will be a pullback that'll come down, roughly to, the 50-day, at least the 200-day, and the 10-day moving average, which you can't. I'm going to change the color of the 10-day so you guys can see it, because it's gray here, but it's on that black backdrop, it's hard to see. But the 10-day is positively sloping and is coming through the 200-day, which is negatively sloping. But you've got the 50-day and the 20-day; they're starting to slope to the upside as well. So I do think that we're gonna come down and test some of those moving averages, and have a pullback tomorrow. So that's the play on the SPY. Now, if we look at the 1 day again, you can see that there's this wedge forming here. It's gonna obviously break either down or up, and what I think would happen is we could come down on this pullback. It might take a couple of days, but say come down to, say, 389 here, and then kind of chop here, break out. So maybe something like this, where you come down, hit the trend line, then break out, get everybody excited, fill this gap right here at right around 408, where we tagged it twice here and then sold off. So this would be the third test of this gap right here. So come down to this trend line, break out, and then I think we would maybe come back down and then do something like that. And then maybe at the Fed meeting, they pour cold water on this rally, and then we fall back down. And then, because if we did something like that, so if we break out of this downtrend line, if we break out of this downtrend line, but then fall back below it, there's gonna be a wave of selling, and it's gonna happen fast. And we should probably come down here at least to the lows, if not make a lower low. So you guys know what I think, that I'm expecting a break in the credit market sometime this year. I think it's going to happen really within the next few months. But I think what would give the Fed the most time is if we, so if something breaks, they could carry the market a little bit. But what I think it gives them the most time is if we come down and make a lower low and then go up and have a huge short squeeze slash, I don't know, some kind of bull run, um, and just have this lower high and then come back down and crash. So um, that's what I think would, obviously give them the most time for where they could print more money to get out of that situation. Now we could do something like this as well, where we break out, hold this, and then come up and then crash, or something like this where we just, we break down, get down here, can't get back above the highs, and then crash. So something, yeah, there's three different scenarios that I'm looking for, three different ways I think it could play out, all ending in a crash. But I'd prefer that we, would come up here and make a lower high. I think that would be easier to trade, because I think really I prefer for that to happen right now. So maybe if we hold here and then get above the downtrend line and then come up, make a lower high, I think that would be easier to trade, because if we come down here and make this lower high, it's going to be hard to know when we get to this spot if that's going to be the end of this counter trend, or if we're going to come back up and make a higher high, or if we just crash. Because if we do come down here, oh gosh, I'm getting a little crazy with these lines, but my point is, if we do come down here and we do something like that, it's going to be hard to know. It's going to be an identical look to the 2008 crash. So and it'll be identical to the 2008 crash. If we come down here and make a lower low, probably it's probably going to be not that low. I was expecting it to be somewhere around the pre-COVID highs. So right over here around 33, 333, 337, somewhere in that range. Okay, but if we do that and then we do something like this, that's going to look identical to the 2008 crash. And so it's going to be hard to determine if you don't want to miss the bull run up to the to the lower high. But that's going to be the scenarios. You'll be hearing it. You're not going to know if it's going to come up and make a lower high, because I think that would be something that would happen quick, and something like a big short squeeze, like probably the biggest short squeeze we've ever seen. Or if it's just it's like I said, it's gonna be identically matching the 2008 crash. So you don't know if it's gonna crash down. So preferably, I think it'd be easier to trade if we did break out of the downtrend line, held above the 200-day for a little bit, for a couple of weeks, and then started making the move up. I think that would be the easier scenario to trade. So, but as of right now, just taking it day by day. I think we're going to come back down to this trend line, or at least to these moving averages, the 20 days here at 389. And, so yeah, that'd be about the same. So right around 389 to, 393, somewhere in that range. I think we get a pullback, and then we get a move up to try to break out and see if we can fill this gap, get above this 408 area, is what I'm thinking. But as far as Apple, I know if you saw my last video, I say the title is Apple 40% crash. I actually did buy puts on Apple today as well, and I usually don't do this, but I bought puts about, I think they're April 21st, so almost 3 months out. So April 21st, they're 120 puts. I paid about $1.60 a piece for those. Yeah, so those are the ones I like there for April 21st. They're 120 puts. Again, we come up and we filled this gap twice. You can see this gap right here. Didn't close above it. We got right up to it. Got rejected there again today. So I think we're gonna pull back tomorrow, probably a few percent down to the trend line. The 10 days moving up, so it might just come like right here and then stop, and then try to make another go at the gap. And these moving averages here. So that's what I'm seeing on Apple. Okay, so yeah, that was pretty much it. Oh yeah, no. One thing that's kind of concerning if you are a bull is that the last few days, the HYG, which is the high yield growth, it hasn't participated in this rally these last few days. So the triple Qs has moved up 4.5–5% the last couple of days, but high yield growth has just stayed here under the 10-day moving average. And to me, that looks like a bear flag. So it looks like the HYG could come down here about 1.26%, and a 1.26% sell off in the HYG is going to be a 3% sell off in the triple Qs, somewhere in that range. I mean, it doesn't have to be that way, but it would probably be something along those lines. So the HYG, high yield growth, smart money, did not participate in the rally. Neither did the junk bonds. So I'm seeing that. Okay, junk bonds are not participating in the rally. Actually, a lot of people that were bearish that missed this entire move up. They're bearish, missed this entire move up on YouTube, are now starting to get bullish. That's another indicator, in my opinion, that we're probably going to have the move down soon. I don't know if like I said, if it's going to bounce around until the Fed meeting and they might pour cold water on it, and that's what makes it actually start to move down, or it could be earnings, bad earnings from a company, a big company. But there's just a lot of things pointing to we're going to have a pullback at least tomorrow. Like I said, I don't know if it's going to be the start of the big pullback, but we'll see. But here's the semiconductors. Sorry, I'm moving that around so much. Trying to get a good view for you guys here. This trend line. So this trend line, it got rejected there. That's 16% move down off that trend line. I almost hit it there, got rejected. Same right there. But you see we had a false breakout here. Came down, broke it. Back tested it here, came down. So this trend line has a lot of reactions. It's a valid trend line, and a lot of these trend lines, I've had for years. So this one goes all the way back to 2011. So 2011, this is the semiconductors, Qualcomm, the chip stocks, NVDA, so forth. So we're right here at this trend line again. So and if you look at the 4 hour, because the divergences aren't really there on the 1 day, so that kind of makes me think that we're not done with this move, but they might start building. But the 4 hour is overbought and extended, so maybe we get a pop there in the morning and it makes a divergence on the 4 hour, and then we sell off. But I think there is something to take note of though, because and it's also on the SMH that was NVIDIA. There's an inverse head and shoulders forming here. So you got a shoulder, you've got a big head, and then you've got another shoulder here. So if it breaks out, back test, NVIDIA, Qualcomm, these stocks could really take off, probably another 25 to 30% to the upside. So that is a possibility, and that would obviously mean that the triple Qs aren't going to make their next leg down if the semiconductors are breaking out of a inverse head and shoulders. It's the same as a head and shoulders pattern like this here as a topping pattern. So you got shoulder, head, shoulder, neckline. You break it, back test it. Move down pretty much the length from that top of the head to the neckline. Move down, which is about what we had here. Sometimes you go a little lower. It's basically the same thing with the inverse head and shoulders, but just the opposite. So if we break out here, we could have a big move up of about this length right there. So that, like I said, that would be, about a 30% move up. So that'd be really bullish. If we did break out, back test, and start moving up, then obviously I would be wrong as far as, NVIDIA puts. But the puts I bought on NVIDIA, I'm just really trying to play a pullback, and I think that that's going to happen over the next few days. So I bought 127 NVIDIA, 185 puts for about $1.20 a piece. So 127 NVIDIA, 185 puts for about $1.20 a piece. And then real quick, let's look at coin, because I bought coin puts actually yesterday. I bought $49 puts for Friday for 43 cents. Even though we had this big move down and it bounced around, they're only worth 48 cents because they're so far out of the money. But what I'm expecting with coin, and you can see there's a big negative divergence here on the 4 hour. So you've got price, well, it's about an equal high, but momentum's moving down on both the RSI and the MACD here. So I'm expecting a pullback even further on coin. Like I said, I bought puts yesterday. I mean, I think they're only worth like 48 cents now. I paid 43 cents yesterday, so I made, $5 a contract. But that's okay. I think we get a bigger pullback tomorrow, and I can show you why. I don't think I'm not sure if Bitcoin's done with its move or not, but I have a feeling it's going to go to 25,000 or possibly even higher, maybe even to 28. We'll look at that in a second. But there's this gap over here at about 56. So we haven't been able to get above that gap for a few days. And I did scalp some puts on this move down here. So we, at that move down, then we right back at the gap. So I decided to buy more puts. Starting to get the move I wanted to see. I think we come down at least 11% from this high right here, which it takes to about $49.50. And having 2 days of time with those, even though we wouldn't be below the strike price of the puts that I bought, with 2 days of time and being at the strike on something like coin, they're going to be worth, probably 100, 200%, more than what I paid for them. There is the 10-day moving average here as well, so I'm expecting it to, probably stall out here at this gap in the 10-day. If it closes below the 10-day, and if it does get down here tomorrow, I'll probably sell half the contracts or maybe 75% of the contracts and then hold the rest. I think there might be a chance that we get a big move down to this area here around $44. And in that case, each contract would be worth about $500, and it'd be a 10-to-1. So that'd be a little bit better than a scalp there if that happened, because there's the 50-day, you've got the 20-day crossing the 50, you've got this big gap here. So that, it's definitely a possibility that we could get down there. So, that's something that I'll be watching. But if we look at Bitcoin, there's pretty big. The other video I said oversold when I was talking about that, but it's overbought. So yeah, the RSI is overbought. You can see we're here at like 91, 80s and the 80s and the 90s range. So anything around 70 is overextended, and we're well above that. You can see there's only a handful of times in the past where we've been that high on the RSI. Actually, last time you got to go back to the bull run over here, and there was some negative divergence there, or what, like a double top look. Obviously, there was a pullback about 30% there after that happened. So I'm expecting a pullback on Bitcoin. Like I said, I don't know if that's going to be the end of the move. There's a downtrend line as well. It only has 2 data points right here and here. And if we're above that right now, but I think there's a chance we could get back below it. But the pullback might only be, 4 or 5%. But I might get the move that I'm looking for on coin with that. But part of the reason I bought those puts was there's negative divergence on the RSI. It's not on the MACD, and I said that the other day, and so that kind of worried me. But I don't know. I think we do get a little pullback in Bitcoin, maybe here to 21.4, 21.5, somewhere in that range, and that would give me the pullback in coin that I'm looking for, and be able to make some money on those puts. They're the 127, $49 puts, and I paid 43 cents a contract for. Okay, so yeah, I think that's about all I wanted to show you guys was the SPY, the Qs. I think we went over Apple. Yeah, pretty sure we did. But yeah, so Apple's at that gap, and I've got some long-term puts. They're the April 21st 120 puts. I paid 160 a contract for. So that's it. Want to say thanks for watching. We'll see you next time.